If you're working a 9 to 5 and have W-2 income, you're gonna wanna pay close attention to this video, because in this video, I'm gonna be breaking down the best strategies that you can go ahead and use as a 9 to 5er. So let's get straight into it. So number one, you need to understand some basic concepts before we go ahead and dive into the different tax strategies that you can go ahead and utilize as a W-2 employee. So number one, you need to understand the definition between credits and deductions. So before we get into it, let me go ahead and define a couple of things just so we're on the same page of exactly what you need to know as it relates to being able to save more money as a W-2 employee, okay? What is a W-2? So a W-2 is just essentially going to be a tax form, and that is going to be a tax form that's going to represent how your income is coming in as a 9 to 5er. And in that W-2, it's going to show different information such as your income, your withholdings, the taxes paid, the different things that you're paying for such as health insurance, retirement, all these different things that are coming out of your W-2. And with that W-2 document, it's going to be really important that you have that prepared and ready to go when it comes to go ahead and get your taxes done for tax season. Okay, so let's talk about some important concepts that you need to understand to be able to save more money as a W-2 employee. Okay, so you have what's called gross income, and you also have taxable income. So gross income is all the income that you're making, and that's all the money that you receive during the year. Okay, so let's say you go ahead and work this 9 to 5. Let's say you're making $100,000, maybe even $50,000 during that 9 to 5. That is going to be considered your W-2 income, and that's going to be your gross income. But in the tax world, one of the things that you need to understand too is that there's also called taxable income, and taxable income is going to be the income that's going to be used to determine how much you're going to be taxed, and that is after all the adjustments and different deductions and things that are happening with your gross income. Now, as it relates to actually being able to save money on taxes, you need to understand what are deductions and credits. So let's go ahead and talk about deductions first, because that's going to be the first thing that you need to understand, and then we can move on to the credits later on in this video. Okay, so as it relates to deductions, you have what's called a standard deduction, you have what's called an itemized deduction. And with the standard deduction, as it states, it is a standard deduction. It's a deduction that is given to you by the IRS that is literally going to be able to give you an automatic reduction in your taxable income based on when you're watching this video. Let's say the standard deduction is $15,000, okay? And let's say during the year you made $100,000 as a 9 to 5er, okay? So as a 9 to 5er, you made $100,000, you have a $15,000 standard deduction. If you minus 100 minus 15,000, that is going to be $85,000 in taxable income, okay? So now instead of you being taxed on the full 100,000, it's only going to be that 85,000, and that's what's going to determine basically how you're going to be taxed, and plus that's also going to determine your tax bracket as well, okay? And in the world of deductions, as I mentioned, you have a standard deduction and you have the itemized deduction. So the itemized deduction is actually going to give you an even bigger tax savings as a W-2 employee, and this is how it works, okay? And as it relates to itemized deductions, I like to use this acronym MITCH because it's going to help you remember exactly what itemized deductions are going to be available for you. So the first one is going to be medical expenses. So if you had medical expenses that you paid out of pocket during the year up to a certain percentage, that's going to be deductible for you. The next one is going to be I is going to be interest paid during the year. So if you're a homeowner, by being able to be a homeowner, you're able to take advantage of the mortgage interest, and that's going to be a tax deduction for you as well. The next section is going to be T, okay? There's going to be taxes paid. An example of a tax paid during the year as a homeowner, again, is going to be property tax, okay? So that is going to be an opportunity for you to be able to take that as a deduction for your taxes. The next one is going to be C, that's going to be charitable contributions. So if you're donating to a 501c3 or a nonprofit, that's going to give you an opportunity to be able to save money on taxes. And last but not least, you have H, which is going to be help, which is like casualty losses during the year. So again, you want to make sure that you're working with your tax professional to identify like the different thresholds and the different limits for each of these things. But let's say, hypothetically speaking, this number, when you list out all these different things, let's say that number is bigger than that standard deduction amount that I just shared with you. So like I mentioned, let's say the standard deduction amount is 15,000. Let's say you happen to calculate all these itemized deductions, and now that's 20,000. Okay, you're able to get an even bigger tax savings. Now let me share with you exactly why that could make such a big difference for you. So let's say you have now this difference of $5,000 in extra tax savings, okay? And let's say you're, hypothetically speaking, your marginal tax rate or the tax rate or the tax bracket that you're at is 30%, just to keep the math simple. So now you're able to have a savings of 1,500, which is 5,000 times the 30%, right? And just imagine what that would be like to be able to have that extra 1,500, right? It's so powerful, and that's why I get so excited about talking about this. Now, in addition to those two different types of deductions, there's even more deductions that you can take advantage of, okay? And as a W-2 worker, you're able to take advantage of retirement contributions. contribution. So if you're going ahead and contributing to a retirement account, such as like a 401k that you may have with your job, that is going to be a tax deduction for you. Depending on the year, you want to be able to see if it makes sense for you to max that out. If you max that out, it's going to give you what's called a pre-tax contribution. What does that mean? So pre-tax contribution basically means that you're going ahead and being able to save money on taxes in this current year, and then you have to pay taxes on the money when you go ahead and take it out for retirement. So let's say the maximum amount that you're allowed to put for the year is $20,000. Okay, so let's say, again, going back to this $100,000, assuming that you make $100,000 at your 9 to 5, let's go ahead and give you that $20,000 of the retirement account, which now puts your taxable income at $80,000, and basically that is going to save you even more money. So now with that example, that's going to put your taxable income at $80,000. So difference between taxable income of $80,000 and $100,000 is $20,000, right? Which is what you contributed into the retirement account. And one of the benefits of doing this, not only are you able to save money on taxes, but you're also able to build wealth over the long term. Albert Einstein said that one of the greatest forces in the world is going to be compound interest. And by you being able to put that money into a retirement account, you're able to go ahead and accumulate wealth over time and also be able to save money on taxes right now. Along with the 401k, you also have what's called the IRA contributions. You have the health savings account that you can go ahead and set up with your employer as well. Through your insurance, that's going to be able to give you a tax deduction and allow you to be able to save money for out-of-pocket medical expenses and much more, okay? And that's going to be a huge savings for you at the end of the year. All right, so let's go on to tax credits, okay? Tax credits is going to be a game changer, so make sure you go ahead and pay attention. You want to write this down because this is going to like literally blow your mind, okay? So tax credits is even better than deductions, okay? And the reason why I say that is this, okay? So let's say now at the end of the year, let's say you go ahead, get your taxes done, you end up owing like $5,000, okay? Well, with these tax credits, what it does is it gives you a dollar for dollar tax reduction. Like, it can literally eliminate how much money you owe in taxes, okay? And let me go ahead and give you an example just to really make this simple for you to understand. So let's say you go ahead and qualify for a tax credit, okay? And there's a whole bunch of tax credits that are out there available for W-2 workers, such as the electric car vehicle. That's a new one that just came out. You have child tax credit as well. You got credits as relates to education. I'm gonna share all those different credits later on in this video, but let's say now you owe $5,000 at the end of the year, okay? And if you qualify for one of these tax credits, now let's say you have a tax credit of $7,500, right? Which is one of the credits that you can get for getting an electric vehicle. So let's say you have the $7,500 was the tax credit. Now you have this $5,000. The $5,000 is literally eliminated, okay? So it's not like a marginal difference between how much you're able to save and what you are actually able to get back. It's actually like dollar for dollar. So it literally eliminates and can literally zero out what you owe in taxes, okay? So that's why it's so powerful and that's why it's so amazing. So some common ones that you need to know as a 9-to-5er, and there's two major ones I want to quickly share. It's going to be the earned income tax credit and it's going to be the child tax credit. And as it relates to the tax credits, you have different types of tax credits that are out there for you. So you have what's called a non-refundable tax credit, and then you have a refundable tax credit. The non-refundable tax credit is not going to necessarily give you a refund. So let's say, going back to that example, let's say you have a $7,500 credit and you end up owing $5,000 in taxes. Well, guess what? That $7,500 is bigger than the $5,000, but all it's going to do is just zero out that $5,000. Now, if it's a refundable tax credit, let's say that it's $7,500 and you owe $5,000. Well, guess what? It's going to eliminate the $5,000, but then also you're going to be able to get back $2,500, okay? These are like such like hot commodities, and why people love these refundable tax credits. So that's why people are able to get these big refunds, because they're able to be aware of these different tax credits and start getting even bigger tax refunds because of this information. All right, so if you've been getting value, make sure you go ahead and subscribe and like, and I'm going to move on to the next thing. All right, so let's get into the earned income tax credit. That's typically going to be for low to moderate income earners, and typically that's going to be for people who have kids as well. So if you have kids, you actually get even more of this earned income tax credit. And one of the benefits of the earned income tax credit is the refundable tax credit for you. So again, it's going to be able to maximize your tax refund. And depending on the year and depending on when you're watching this, it could range from $500 to up to $7,000 for the earned income tax credit, which could be a huge savings and really be a game changer for some of you that may qualify for this. The next is going to be the child tax credit. It's going to be for those who have children, and you're able to go ahead and collect about $1,000 to $2,000 depending on your income thresholds and a whole bunch of other factors. But you just want to know that you're able to get this tax credit. It's not necessarily a refundable tax credit, but you do get the tax credit regardless, and it can really be a huge savings for you and really help you out in the long run as a W-2 earner. One quick thing I wanted to mention is if you do have children, you definitely want to check out this video on my link in the description, because I'm actually breaking down in detail exactly all the different tax tax credits as it relates to being a parent. But moving on, you have the child and dependent care. Okay, so if you've been able to pay for dependent care during the year, you're able to get a tax credit for that, which is going to be really beneficial and really going to be able to help you save a little bit of the money that you've already spent to be able to have that dependent care. You also have some education tax credits, such as the American Opportunity Tax Credit, the Lifetime Learning Tax Credit as well, and many more. So again, you want to make sure that you go ahead and identify and see if you qualify for these to be able to better and improve your situation. So this is probably one of the most important parts in the video, but I want to address some of the common mistakes that happens with W-2 earners as it relates to being able to save more money on taxes. And as a CPA, I've seen a lot of these errors and a lot of these issues, and I do not want you to make any of these. Okay, so number one is overlooking deductions. Okay, so not taking advantage of all the deductions that are out there for you. Also, when you go ahead and get your taxes filed, making sure that you have all the right information. Sometimes if you go ahead and have the wrong information, that can actually delay the process and make things worse for you in the long run. So missing deadlines is going to be a huge one for you. Okay, so you just want to know that typically the tax deadline to be able to pay your taxes is April 15th. You can go ahead and file what's called an extension if you need additional time, but you still are required to go ahead and pay your taxes by April 15th. But if you go ahead and file this extension, you now have until October 15th to go ahead and actually complete your tax return. But again, you want to make sure that you're aware of the deadlines and making sure that you're compliant with everything. Now, at this point in the video, you're probably wondering, okay, how can I prepare for the next tax season? And that's exactly why I made this video over here. Make sure you go ahead and check it out, and I'll see you in the next one. Take care.